Okay, for mobile users, right, once again, you can shift my face to the top, top bottom or top right, so you can see what's going on in the slides. I'll wrap this session up in 30 minutes. It's going to be quite a lot of information in a rather short duration. So please raise any questions along the way at the Q&A chat. Okay, just a general disclaimer that the material that I'll be sending you after this webinar is just for your information and not to be shared. And then any of the information that I said is not accountable. Okay, for accreditation, we are GoldSilver Central is a regulated precious stones and precious metals dealer. And we have a large mix of clients with varying needs for precious metals. And I'm proud to say that we have come up with different products and services to meet our clients' needs. So there are many clients who are more comfortable talking in Chinese. So next week, we'll be having a webinar in Mandarin. It will be our first webinar in Chinese. So if you like the sound of that, you can the link should be in the chat box right now. Okay, for those who are attending the session with me for the first time, let me explain to you what it's all about. I'm walking through on different indicators on GSC Live each session. So these indicators, right, they take reference from past price history, using them as data points to give an indication of how prices may move ahead. So simply put, to me, it's something similar to data analysis. And today we'll be introducing a new indicator called Bollinger Bands. So coupled this with moving average, I believe at the end of the session, you will now be able to make better decisions when it comes to purchase of assets. We'll talk about how to use it, and also some points to take note about the indicator and what to avoid when using it. Okay, all of my illustrations for the session will be done on GSC Live, which is our digital platform for clients to purchase physical precious metals, whether in pool allocated or fully allocated form, which is your bullion bars and coins. It's readily available for download, whether you're using your phone, Android, or desktop. So this platform is designed to bring a new level of convenience and also to empower you to make better decisions when it comes to precious metals investment. So this is what you will see when you open GSC Live, the contracts available, and then the bid price and the ask price. And these are the different functions you can do when you want to make a purchase or sale. I went through this on my previous webinar. For those who have missed out and would like to find out more, I've uploaded snippets of this onto YouTube, and you can take reference from there. So the YouTube links should be on the chat right now. And of course, you can simply open a demo account to have a feel of the platform first. We have a step-by-step tutorial for this available on YouTube too. Okay, so a quick recap on our previous session. Let us refresh our minds on what we went through last webinar in October. So the key learning point of last session, right, is that we are now able to determine the market trend. If prices are above the EMAs, we use the EMA 20, 50, and 200. And the EMAs are pointing higher, the market is in the uptrend. Same for downtrend. If prices are below the EMAs and they are pointing lower, then it is in the downtrend. So using moving averages, we can also identify the support and resistance levels and also spot value areas for entries. Lastly, we also talk about being careful of high risk entry points. If prices move too far away from the moving average, prices are likely to revert back to mean, right? So the question then was, how much was too far away? Which brings us to today's session. We will be bring in Bollinger Bands to let us have a gauge of when prices are moving too far away. So what are Bollinger Bands? Bollinger Bands is a technique developed by John Bollinger, hence the name. There are actually two bands. They are placed two standard deviations above and below the 20 days moving average. So they envelop the moving average. Standard deviation is used, right? So that we can see how prices are spread around the average value. So prices are considered to be overbought when they are overextended to the top and touch the and touch the upper band, and considered oversold when they are overextended to the bottom and touch the bottom band. So the graph actually shows very clearly how prices bounce between the upper and the bottom bands. But do note that that is not necessarily always the case, because you have to take into account of different markets condition, which we will go through in the following slides. Bollinger Bands also measures volatility in the market, which is very useful when it comes to being aware of impending breakouts. So how do we use Bollinger Band? All right, we talk about buying when prices touch the bottom band and selling when prices touch the upper band, right? So this is only the case if the market is range bound. That means the market is moving in the sideways direction. So in this kind of market condition, the concept of buying at the bottom band and then selling at the upper band works. But if you do that on the trending market, you're most likely going to see very undesirable results. So in the graph, you can see on I draw a straight line for better illustration. The prices are moving at the sideways, and then when they touch the upper band, they'll come down to the lower band, and then so on and so forth. So what happens in the trending market? As you can see, if you buy at the lower band on the downtrend, you're gonna burn a hole in your pocket. Or if you sell at the upper band on an uptrend, you're missing out on higher profits. So what do we do in trending markets? In the uptrend, prices will hug closely to the upper band. So for price correction, right, they are more likely to revert back to mean, which is your moving average 20, the middle line. And at that price point, that will be the opportunity for entry. So it will revert back to mean instead of the lower band for uptrend. So we talk about spotting opportunities for entry. So what about exit in trending markets? The concept for selling is you want to exit. You want to sell your precious metals before the uptrend turns into the downtrend, right? So what you can do here is that when prices break below the moving average 20, the middle band, the middle line, you see that the Bollinger Bands start to contract and squeeze together. That will be your signal to exit your position. As shown in this graph, let's say you buy your gold here in May, and when June comes, you saw that prices broke below the moving average 20, and the Bollinger Band starts to squeeze together. That should be your call to sell your gold, which turns out to be a good decision because it was a trend reversal and prices moved down quite substantially after that. Okay, I said just now that Bollinger Bands measure volatility. So how do we derive that? Simple. When the Bollinger Bands, right, expands and widen from each other, it means the volatility in the market is rising. Same thing for the opposite. When two bands are contracting and shrinking towards each other, it means the volatility in the market is falling. So what can we do with this information? A lot of things happen in cycles. Same for volatility. Volatility happens in cycles. If the bands are unusually far apart, that often is a sign that the current trend is ending. And if the two bands are getting too close to each other, is a sign that the market is about to initiate a new trend. So let's take a look at the graphs. You can see the cycles of volatility here. On the top picture, bands are close together, then expand for a new trend, then contract again and expanded. Same for the graph below. A narrow width of the bands first, and then expanded for an uptrend, contracted again for consolidation, and then expanded for a downtrend. So you can see how the cycle of volatility works. The point I'm trying to bring across here is to take note of periods of low volatility, and then you position yourself for the incoming and the impending trend. So in summary, I'd like to emphasize once again on what to avoid when using Bollinger Bands. The reason I started my first webinar with moving average was because I believe trends is one of the most important factor when it comes to purchase and sale decisions. So you should always be aware of the market trend. When it is range bound, buying at the lower band and then selling at the upper band works. But when it comes to the trending market, you can throw that concept out of the window. Prices will move between the moving average 20 and either of the upper or bottom band, depending on which trend direction. Okay, second point here is that it's very risky to open a position when the prices are out of the bands. I highlighted so many points, right, whereby prices are like the rubber band. When it's too overstretched, right, what happens naturally, right, is that it will snap back. You look at the charts. Even though it is a strong uptrend, it will be wiser not to buy when prices are out of the Bollinger Bands, as you're likely to be able to buy at a better price and also take lesser risks in the case when the uptrend ends and then reverse. So today, I have now shown you how the Bollinger Bands can actually help you to gauge when prices are too far away from the moving average. So let's get our Bollinger Band set up now. Okay, previously, right, you click on chart and you can see that we set up our EMAs on a previous session. So now we are going to set up our Bollinger Band. Same thing on the top middle part where you see the F, you click on that. And then you click on main window. And then you click on Bollinger Bands under trend. We're gonna set the period at 20. And then the deviation is 2. Of course, you can set deviations according to what you like. You can set it at, I know of people who set it 1.5, 2.5, 3. So if it's 3, right, means the bands are more outstretched. So they are more wider from each other. We set it at 2 because most of the prices will fall within these 2 deviations. And then for style, let's set it at purple color. Okay. So when we press done, you can see the bands, the Bollinger Bands in your graph right now. Okay, our previous webinar was done in October. It was a downtrend previously, and then you can see how prices picked up and then start hugging the top Bollinger Band. And then now it's way above, and actually it's touching at, it's outside of the Bollinger Band right now. So as I mentioned, I think there's a considerable risk when if you decide to buy it at price point. Okay. This indicator, right, it works best when combined with overbought or oversold oscillators, as oscillator gives off good warning signals of when a trend is starting to lose momentum. Momentum, right, is built to be faster and be one step ahead of price movement. So I will likely touch on that in the next webinar.